You found a perfect deal, but the bank's not going to finance you. How are you going to do it? Today, I'm going to give you a couple ideas on how you can acquire some property using all kinds of creative ways. The first one I'm going to talk to you about, I'm not a really big fan of. It caught a lot of traction over the last couple of years, but there's some hidden dangers that I just want to make sure you're aware of. It's called the subject to. What it means is if you want to sell your property to me, I may give you a little bit of money, but you basically allow me to just start making your payment and you walk away from it. It's great for the person who's buying. It's not great for the person who's selling because it's your credit on the line. I make the payments and you have to hope I make the payments or your credit's going to take a ding. The thing I don't like about it is it just feels a little shady. And why I say that is because a lot of times when you take a loan from the bank, there's something called the due on transfer clause. And this basically means when you switch it from your name to my name or my LLC, the whole note could be called, meaning we have to pay for the whole house, which voids the whole purpose of trying to get the creative finance way of the subject to. Now, I know there's a lot of people out there pumping the subject to. I'm just trying to make sure that you understand what the real risks are with that. If you decide to go the subject to path, I really think you should get a lawyer. You're going to need it to make sure that everything's there, that you're covering yourself, all your assets, and you're not just throwing money away. And then the person who originally owned the loan has something else happen. The second option I'm going to give you is similar, but yet different, and that is the seller finance. You guys are probably familiar with this. Typically, the person has the house paid off and they sell it to you over time. They hold the note. You've heard contract for deed, which basically means you write a contract, you make monthly payments, and the house becomes yours. It can also be straight seller finance, like what a bank would give you. You can have interest against it, and that is what a hard money lender would do as well. You could borrow the money at, I don't know, 8, 10, 12% interest. It's usually higher than you would get at a bank because they want to make sure that they get their return and they're a lien on the property. I've also seen rent to own. Let me tell you about a seller finance story that was really successful for me. So in my solo 401k, I only have so much money in there. I have a realtor who's a friend who had some clients who were also friends of his who had a house that they were trying to get out of because they'd moved far away. I was able to pay money down on the house and then pay for it over time. What's really weird about this one, and probably not something most financial advisors would say do, was the house was rented for $460 a month because the person only used the first floor. But I paid $1,000 a month on the house until I was able to get it paid off. Most people right off the bat think that that's a terrible deal because you're losing money instantly. But remember, this is in my solo 401k. I have a couple rentals there already. So there's a lot of cash flow. So I'm able to take all that cash flow and just keep acquiring because I don't live on that money. Eventually, the tenant moved out. We were able to go in. We were able to get everything remodeled, fresh, and fixed up, and it was going to rent for $1,400. The great thing about seller financing is it does not appear on your credit. Again, I'm not saying any of this is financial advice. I'm just giving you thoughts and ideas on how you can take advantage of maybe what's going to happen here this year or next year, where maybe we're going to get a pullback and maybe you'll have opportunities to buy things. And the next one is the 401k. I did a 401k loan on a house that I bought that I haven't showed you yet. And then I turned around and I BRRRR'd that house in order to get that Civil War era house. For that one specifically for me, when I BRRRR'd the house, I was able to walk away with about 50K. So I was able to pay off my original loan and still have a little money that I could fix the Civil War era house. This is another one that I see executed, and I actually see a lot of people kind of recommend this, and it's called PLASTIQ. If you go to PLASTIQ.com, you can actually take 0% credit cards and get an advance. You don't get charged in advance. You just run your credit card and then they give you the money. They take a percentage, you get the money. It's kind of like a hard money lender, but you're getting 0% for a certain amount of time. You have to know what you're doing because if you don't and you get caught and you have that money out there longer than you can remodel and get the property refinanced, you're going to get stuck with that. And a lot of those backdate to the original date. So you may have 20, 30% interest on the original all the way back. But my favorite way of doing it is really the BRRRR method. And I want to just like walk through that one more time with you. So you buy the house. Usually you buy a house that needs a lot of work. You rehab that house. You fix it up. You rent that house out. And after you get a good tenant in there, you refinance that house and then you repeat. The BRRRR method, in my opinion, is the best way to really make this work. There's a lot of people out there making a lot of money teaching you how to do the BRRRR method, but it's pretty simple. Again, you just buy, rehab, rent, refinance, and repeat. It's important that you're buying in an area that's going to appreciate over time and that you know well and that you can actually do all the work on or manage the contractors to do the work for. But if you don't, Property managers are great too. I'm going to do another video about property managers. When is the right time to do that? Let me know if there's other tips you want me to give you about being a property manager or managing tenants from afar. I have over 38 doors. I'm happy to share my knowledge with you. But creative financing doesn't always have to be money. Sometimes people want little nuances. Sometimes people want a certain money for the house, so you can offer to cover their closing costs. You can offer to, when you're buying, you can offer to like, I don't need any property tax credits. In the case of the house of the lady who almost ghosted us, she just wanted to live there a little longer, so I gave her free rent. Sometimes I think people buy houses and they think, hey, this is going to be cheaper than rent, and I'll just keep doing it. And then when a roof comes or when a major plumbing repair comes, they don't know what to do. And I think they look for their way out. Please hit that bell, like and subscribe, comment down below. Stick around, we're going to do great things.